This last Sunday was Halloween, so you know what that means for the stock market. Buy! Oh, you don't? Well, let me explain. Welcome back to the Financial Beanstalk. My name is Nick, and today we're talking about the Halloween strategy. The Halloween strategy is an investment strategy that says stocks perform better between October 31st, or Halloween, to May 1st, than they do between May through the end of October. So essentially, like the title says, you should invest as much as you possibly can in November, hold on to it through winter, and then sell all your stocks at the beginning of May, and just kick back, relax, and enjoy your summer vacation. I'm not giving you financial advice here though. And I know what you're thinking. Nick, this completely contradicts dollar cost averaging and long-term holding as the primary investment strategy, which has been proven to be a successful strategy for millions of people. And I'd agree with you, but the data kind of says otherwise. Apparently, this strategy has been pretty successful in beating the market over the last 50 years, which is a pretty solid sample size. The data says that you'll beat the market more than 80% of the time when you implement this strategy over a 5-year time period, and more than 90% of the time you'll beat the market if you implement it over a 10-year time frame. This is some ridiculous voodoo. Everything I know is a lie. This Bloomberg graph kind of reiterates that point. It shows the Halloween strategy with the S&P 500 from 1970 to 2017. It shows this blue bar is November through April, so the time you are invested with the Halloween strategy. This orange bar in the middle is May through October, so the time period right after you sell off all your stocks. And then the green bar is the difference between them. So as you can see on the left graph, from 1970 to 2017, you did 5.4% better in the S&P 500 during the Halloween strategy. And then on the right, there's this little smaller sample size from 1991 to 2017, but it shows pretty much the same thing, where the S&P 500 did 4.7% better. So who needs dividends when you have spooky season? If I'm understanding this graph correctly though, I still think you would have been better off just staying invested in the market. While it does reiterate the point that the market has better returns with the Halloween strategy during November through May, it still returned at least 1.5% from May through October during this time where it says to completely sell out of the market. So sure, it's not as good as the Halloween months, but it's still some return on your investment. So I feel like if I were to implement this strategy, I would do a mix of it. Maybe allocate some more money to be invested in November, and then just maybe back up a little bit during those summer months rather than going all or nothing with it. But what do I know? I'm just a beanstalk. Nobody has really presented a definitive reason for why this is actually a thing. A lot of it says that it dates back to old England when the rich people would go to their summer homes and not really worry about their investments, or same thing with New York nowadays, where people are going upstate, enjoying their time in the Hamptons or in Nantucket, and not really paying as much attention to the stock market. All throughout the hypothesis that there's a group of witches that are just super into investing, and they cast a spell every Halloween to help their portfolios. Seems just as plausible as any other reason, right? Especially in today's market where everything is made up and the points don't matter. Anything is possible.
Anything's possible!
I also thought it would be pretty interesting to look back at this over the last 2 years in the time of the old C19. And had you implemented the Halloween strategy, you likely would have missed out on a lot of money. Taking a look at the S&P 500 again, as you can see, back in November of 2019, you'd have entered the market at around $3,000. But you would have sold at a loss in May of 2020 at around $2,800. So a couple months into the quarantines and lockdowns and all that fun stuff. But you would have missed out on all the gains throughout that summer when the stimulus was pumping, the money printers were running at full capacity, all the way up to $3,300 in November when you re-entered the market. but at least you would have made some money during the Halloween strategy in 2020 into 2021. You'd have made all the way up to $4,200 in May of 2021, but you would have sold out again and missed out on the continuing of gains through 2021 all the way up to today's prices of $4,600. Now it's safe to say that the last 2 years in the stock market have been unlike any other in history, so who knows what's going to happen at this point. So are you going to implement the Halloween strategy? Or do you think it's all just hocus pocus?
It's just a bunch of hocus pocus!
Financial YouTube would probably be in ruins if they couldn't talk about the stock market for 6 months out of the year, so I don't see the strategy catching on too much. I wonder if the Halloween strategy is the same for crypto. A video for another day. Go ahead and YouTube mumbo jumbo that subscribe button, that like button, and that bell notification so you don't miss any future videos. I truly appreciate you watching, and let's continue to grow this beanstalk. I cannot wear this for a full video, even though it is festive.